as stock goes up, because you're long gamma, what's happening is this delta number, which is right here for the 86 call, 85 call, is 36.50, 37 roughly. As the stock goes up, just as the call is deeper than money, like you look at the 80, this call value is going to increase. Now, obviously the 80 is going to increase as well, but remember, we're 3 to 1. So what's happening is we're getting longer because our calls that are out of the money are becoming closer to being in the money. Our gamma is giving us upside movement because the relationship of the movement of the stock to the option is increasing our price of the value and the delta of the option. So our delta position as the stock goes up, which started at 460, is going to grow and get bigger and bigger. Now, what do I do with that? All right. Well, this is where you have to pay attention to the market, meaning pay attention to how is the overall market reacting. Is it strong? Is it neutral? Is it negative? And this stock just happens to be up. How is this stock itself acting or reacting to the market, or is it independent of the market? Because from that analysis, you're going to start to make your decisions on what do I adjust and when do I adjust. Well, when a stock is moving in one direction and continues to move in one direction, if you manage to sell deltas off to adjust to it by either selling, let's say, maybe you sell one of your 3 calls to reduce your delta, okay? Because when you're having the stock go up, you're obviously selling that call for a higher price, okay? Take off some of the delta by selling the call to put yourself into a 1x2. If the stock makes even a bigger move, you could sell off another call and you put yourself into being short or vertical at that point, but maybe you've made enough money in the profit of the calls that you sold that being short the vertical may be a good price to be shorted versus where the price of the stock is. Or what people do is they trade stock around a backspread, okay? Most of the professionals in many cases trade stock, meaning that they wait for what might be a pronounced move in the stock, or it could be what would be, I like to look at the pricing of the option. This is a mistake that I think a lot of people make when they're trading, even the professional group. When they're trading a backspread, most of the models, Black-Scholes, binomial, trinomial, okay, they give you a backspread, they tell you where you should be in the plot that I showed you as far as what your deltas are. So when you look at this plot and you look at the point of the price of the stock and you look at your position and the plot says, well, up $1, you know, if I'm 460 deltas long to begin with and I've got a little bit of a gamma, I probably will be, you know, picking up another maybe 400 deltas, 500 deltas, because that's what the models show. But what you need to look at is look at the pricing of the options. So just very elementary, if I got a 37 delta option and the stock moves up $1, technically that option should be up 37 cents, right? So I'm long this $1.57 option. Stock's up $1. Each one that I'm long, this call should be trading up 37 cents, roughly $1.94. What if it's trading around $1.80, $1.85? Well, that tells me that either there's not been enough demand in the buyers or the option activity, or vol has come out, therefore reducing the price of the option because vol is going up. Therefore, when vol goes up, stock goes up, vol has a tendency to come down. Why is that? Well, you've got a move up and you've got the vol decreasing based upon the move, because the move, as it goes higher, becomes a smaller percentage of the price of the stock. So what's happening is that option is not moving at a 0.37 delta, or it's not moving at that 37 cent to $1 relationship that you're expecting to. So it's only moving maybe at a 25 delta or 25 to $1 ratio relationship. So you have to make the adjustment there according to what's really happening. And this is what, as a tendency, most people trading backspreads make a mistake in doing. They overtrade their backspread because they're expecting it to move in relationship to what they see on the screen in front of them, what they think the linear relationship should be of the delta relationship of the option, what they think that dollar relationship should be of that delta relationship to the option, and it's not happening. So you've got to be very careful with how you adjust your spread, your back spread. If you see the stock, think it's up $1, I've got 460 deltas I can sell, but yet it only shows that it's moving at about 360 deltas, you only need to sell 360 deltas. Now what people do is they sell those deltas, and then when the stock comes back that same move, they buy that back. So if I do that, what I'm doing is I'm day trading the back spread to capture what? Some of the value in the profits, because what I've done is I've helped myself capture what has been some of the premium decay. I've got my premium decay that I need to get back into the till that we talked about in this position, because what we talked about, it's costing me $66.20 a day. So if I could trade this position, if I could trade stock by buying or selling it, back and forth, stock goes up a little bit, sell it, comes back down, buy it, and using the deltas that I have to do that, in a relationship of how the deltas are moving, what I'm doing is I'm extending the life of the back spread until I get that big move. There are people that are very skilled in trading stock that's what they do. They put on these back spreads because they do believe there's going to be a big move, either in this case up, and what they do is they make stock sales throughout the day, stock buys throughout the day to capture profits to make up for this premium decay, because 66.20 is coming out of that position in the value of the options, meaning that each day this $1.57 is going to lose value, because as we know, options are a wasting asset. Now what I want you to talk about is that Ferry's got a target on this trade in CAT. So we put on a spread for $6.10. We're looking at the spread, buying 30, selling 10. We're putting it on right in this range here at these price levels. And why are we doing that? And I want to turn that over to Fari, because let's talk about what could happen if we get to his target in this stock, Caterpillar.